For the 16th episode of How to ThinkScript, we'll switch gears and explore writing ThinkScript code to achieve as close to automated trading in ThinkOrSwim as we can. Now, before I move any further, I want to caveat this by saying that this technique still requires you to manually write each code every single time that you'd like the condition to trigger, whether it's an entry into a trade or an exit out of a trade. There's no easy way, at least that I'm aware of, to have fully automated trading in ThinkOrSwim where the platform does that trade repeatedly every single time without you ever needing to resubmit that same order. Now, that being said, this is still an incredibly powerful way to take advantage of some of those patterns that you may have found, especially on longer time frame charts. Now, the reason that I'm saying you focus on longer time frame charts here is because those usually require you to be more patient, right? You have to keep monitoring those charts on either day after day after day if you're using the daily time frame or 30 minutes or whatever it is, but they require you to keep just looking at these charts in a mechanical process driven approach. So now if you do have that sort of checklist type trading approach here, then most of this is mechanical, and that means that most of it we can start to outsource to the actual ThinkOrSwim platform to try and do some of the heavy lifting and automate that trading process. Keep in mind that most of this is experimental, so you should always test out your ideas and code in paper money first before you put even a single dollar of real money towards it. So with all of that, let's get started. But first, a little bit about us. We are TOSindicators.com, home of the Volatility Box. The Volatility Box is our secret tool to help us consistently profit from the marketplace. We're a small team and we spend hours every day after the market close doing nothing but studying thousands of data points to keep improving and perfecting these Volatility Box price ranges. We have two separate Volatility Boxes, one for futures and one for stock. Our futures volatility box comes with support for 9 futures markets including the S&P, the Nasdaq, the Dow, the Russell, crude oil, gold, the 30-year bond, copper, and natural gas, and we're always looking to add new markets. We update the models every Sunday with everything that we've learned over the course of the entire week and the new data that's come in, and we currently have 4 different volatility models to help you adapt to any volatility conditions, whether it's this previous week of contracted volatility or the first few weeks of February and March of 2020 when it seemed like the world was going to end. We also have a video setup guide to help you get set up and started, along with a suggested trade plan to really understand the system. Our stock volatility box is a powerful web-based platform to help you trade stocks like a pro. We support 8,200 stocks and ETFs with daily price levels that you can easily run. Just like that, you have the price levels of those stocks that we just ran into our query with daily levels that you can use to actually trade. We also have a real-time scanner that gives you trades that are setting up during live market hours, along with an indicator page where you can take those same symbols and generate ThinkOrSwim files if you'd prefer to see these volatility models in your ThinkOrSwim platform. We have aggressive and conservative models in our stock volatility box, and more information on how to use these along with setups is on the insights page. Our stock volatility box is a powerful system that should help you trade stocks with an edge at the edge and really take full advantage of the volatility box trading system. Both memberships give you access to free members-only resources including things like our 90-minute tutorial on building a much better squeeze and members-only indicators like the edge signals. If you trade both stocks and futures, send us an email at contact@tosindicators.com and we can offer you a trader-friendly bundle offer that should really help you out here. Start trading with an edge at the edge and join the Volatility Box family today. Now, without further ado, let's get back to the tutorial and cover everything that we're going to discuss over the course of the next hour or so. So there's a few different topics that I'll go over, but the format of this is mostly application based. So we'll start off with just some high level background information with what automated trading is and why it's important and where you can find this in ThinkOrSwim, at least that automation triggers window. And then outside of that, we're going to spend our time just getting our hands dirty. There's 8 real life scenarios that I've coded out. These are just sort of real life trade scenarios that you might find yourself in, whether it's when you want to launch an iron condor, whether it's automatically triggering a covered call once you hit fib extensions, things of that sort. So these are the 8 different scenarios we're going to go through. The first is around our nightly trending list. The second is around an automatic iron condor. The third is around automatic covered calls. The fourth is buying a put whenever we use the built-in RSI, which shows us those bearish breakout signals. Then the fifth one is just going to be buying a regular pullback to the 34 EMA, but using certain conditions. Then scenario 6 is going to be assuming you have an existing position that's, say, squeeze based, then to sell that position whenever that squeeze is starting to lose momentum. Then scenario 7 is going to be, we're going to start to bring in multiple indicators to show you that how far can we start to push this particular window before we start to get errors. And then finally, in scenario 8, there's two different parts, A and B. A is going to be about entry, and then B is going to be about exit, and both are related to just combining, again, multiple conditions, this time implied volatility, to try and find automated trading triggers. If you'd like to follow along, this PDF, along with all the code snippets that we share, are available for free on our website at tosindicators.com/indicators/automated trading. All right, so with all of that out of the way, let's get started and dive into this actual tutorial. Let's first start by asking ourselves why automated trading? Why should we even care about this? So the answer there, I think, starts with really the idea that very few trade ideas are actually original in their truest form, right? Most of the time we find trade ideas and patterns, and I'm sure many other people have found, and we've all backtested them to great lengths. So it's not really finding these patterns that separates a successful trader from a non-successful trader, but it's more so the ability to execute on that actual plan. So now with automated trading, we can start to eliminate some of the emotion that takes place when it comes time to execute the plan that you may have, put in forth for yourself based off of your setup well ahead of time. So that's step number 1. It allows you to create a plan and set that plan into actual action. Now, step number 2 is it allows you to not only have this plan in action, but deploy that plan on multiple positions and multiple tickers, right? Most of this is, again, systematic. It's just decision-based. And for us, most of that can be driven down into a checklist type approach. So when we have that sort of a process-driven approach, that then gives you the flexibility to manage multiple positions using that same one-time code that you have to sit down and write, which then allows you to scale this much, much easier. And finally, the biggest advantage with automated trading is this concept that you can start to outsource much of the work that you currently have to do with trading to ThinkOrSwim in itself, right? So this lets you sit down one time or one weekend, find some patterns that you may like on larger time frame charts, create these triggers and orders so far that it actually goes ahead and triggers you into the order whenever those conditions are true. And it won't if those conditions aren't true. At least that's the premise of this. So it sounds really great. What are some of the setbacks or the shortcomings of the automated trading functionality in ThinkOrSwim? Well, first off, let's be clear that it's not a platform meant for auto trading. We're sort of hacking it in a way or using it in a functionality and pushing what is really allowed in ThinkOrSwim to try and get what we're looking to achieve. So with that, you'll face a lot of limitations in the functionality and the studies that it can support, mostly because we're using it in a way that it's not really meant to be used, which is to auto trade. Now, the second con here is not really a con per se, but it's one that requires time, which makes it a con, which is you have to have extensive testing per each custom method, whatever strategy that you're looking to deploy. That's where always trying it in paper money first is important, but if you're using something like daily setups, there's a good amount of waiting involved there. And finally, the third con, and this is around if this is a strength for you, so it's depending on how you're looking at this, but you lose the advantage of having more data and revised decision-making skills at the time of the actual setup, right? You now have the luxury of having more price information, more volume information, more information off of whatever other indicators you may be looking at, and that usually means smarter decisions. Now, that could be a disadvantage if usually that makes you feel more like a deer in the headlight and start to abandon your plan in the face of fear, right? So depending on how you look at it, that may be a con, that may be a pro, but really that sets us up for this is what automated trading in ThinkOrSwim is all about. So that then leads us to the question, well, what can we actually control? What can we tweak? And how far can we take this automated trading functionality in ThinkOrSwim? Well, that then takes us to this automated trading triggers window, and I'll show you how to get there in just a second. But let's first focus on what this screen offers us in terms of information that we can tweak and change ourselves. So starting from the top, we have our price rules. So here's where you can choose whether limit, market, so on and so forth, and assign a price if you'd like to assign a price from the get-go. But another cool feature that ThinkOrSwim has is that you can limit the link to some preset price here. And so if you put man, then that's a manual price, but you have the options with things like joining the ask, joining the bid at the time when your trigger's actually set true, things of that sort, even the mid price, right? And so this is where you can start to unlock this feature for both options, for stock, whatever you're looking for, and tie the limit to a price so that you don't really have to sit there and try and predict what that price may be at a given time in the future. So that's one cool functionality. The second is These orders that you trigger out can have the time enforced to either be day if you're looking to day trade, or they can even be GTC, which allows you to sit there and create these alerts once and then reap the benefits of that whenever they do trigger true, because that alert will always be out there. The best part of this functionality comes towards the bottom, which is where you can really start to add in custom studies. So here in the conditions pane, if you add in the symbol in the method column, you can switch this to then be study, where you can add in custom indicator code on your own. You can either reference previously built studies or write your own custom, very simple studies here, but that still starts to give you a lot of power, right? Things like moving averages, the basics can start to be included here in whatever combination you're looking at, but then you can start to have this automated triggers pane. So now, with all of that background kind of set in place, let's start to brainstorm some trigger scenarios that I think you may find yourself in the real world. These are real things that are setting up. Some are real examples right now, and some are for just Volatility Box members, but regardless, they're all scenarios that I think at least some of us have found ourselves in at some point during our trading journeys. So the first scenario we're going to look at is for more of our Volatility Box members, and this is around that trending list concept, right? So here you're combining time and price together. And that's the first dimension we're looking at in scenario one. So an example of that might be, hey, go ahead and buy Microsoft if it crosses $175, but only if it does that in the first 15 minutes. Now, scenario two is taking that into a slightly more advanced step, right? Each one is trying to build on a concept. So scenario two, we're going to sell Iron Condor on Home Depot whenever price falls from its current price, and it falls between 195 and 200, where you expect Home Depot to start to chop around for a little bit, right? And that you may come to that conclusion based off of whatever indicators you're using. This is all just about how do we program those triggers. Now, scenario three may be something like selling a covered call on pre-existing shares whenever price hits that 2.0 Fibonacci extension to try and quote unquote collect rent on a profitable position, right? So here you can start to manage your positions, your existing positions, where you don't have to sit there and try and manage and figure out, hey, should I be selling a covered call or not? You get to sell that covered call as soon as price is hitting your extension. Sure, you may not get the best price here, but you also get the advantage of selling a call in the face of momentum, which lets you start to collect more premium, right? You can outsource a lot of this, so you're not consistently looking there and going and executing the trade on your own whenever an alert triggers. Now in scenario four, we're going to buy a pre-selected put whenever our built-in RSI in ThinkOrSwim is showing us breakout signals. So those are the first four scenarios. Let's go over the next four scenarios before we start into the actual code. Now, scenario five is buying stock if we get a pullback to the 34 exponential moving average. This is just arbitrary. You can tweak it to whatever you want, but the whole idea is you're only buying this pullback if your moving averages are stacked. And whenever that does happen, you're doing so with an OCO order, both with your stops as well as targets. And these are going to be defined prices. Scenario six is now again going back to the idea, if you had a position that say you've entered because of a squeeze, well, how do you close that position automatically whenever the squeeze momentum starts to decline on its own, instead of you having to sit there and monitor it on whatever time frame you may be looking at, and again have that deer in the headlight sort of syndrome, because one time frame tells you something else compared to a different time frame, and then your entire plan goes out the window, right? This is how you can make sure that you're sticking to the plan that you set for yourself ahead of time. Now, scenario seven is one in which you're buying a pre-selected call if you have a squeeze with greater than average volume and your exponential moving averages agreeing with the direction. Now, the thing to really take away from this is less about these conditions, right? This is not a winning filter or criteria, but it's the fact that we're starting to layer on multiple conditions, and that's still not breaking the complexity variable of ThinkOrSwim in this particular window pane. Now, scenario 8 is the most complex one, in which you're buying on implied volatility pullbacks. Not pullbacks on the stock, but pullbacks in implied volatility in an otherwise strong uptrend in the actual stock. So this is a bit more complex. It's almost Inception-like in the sense of you're running moving averages on the implied volatility, buying a pullback on that, and all of this is still passing that test of, hey, does it meet that complexity condition in ThinkOrSwim? Simultaneously, when we place this execution order to enter a trade, we'll also put in our good till cancel order for an exit for whenever these moving averages are no longer stacked, and we'll do so on a lower time frame chart. So let's say you're entering on a daily chart off of this pullback. Well, you're waiting for, say, a 4-hour or a 1-hour chart to then tell you that, hey, the moving averages are no longer stacked. You should get out ahead of time. right? And so these are the 8 scenarios that we're going to cover in this tutorial. It's going to be a bit longer of a tutorial, but I think it's going to be a really useful one. And again, I can't stress this enough. Make sure you test everything in paper money first, right? This is real money we're talking about. You want to test your code, you want to test your conditions. Make sure you don't have any silly errors that are going to cost you real dollars. Let's start with scenario 1, which I think should help us get our feet wet. So for scenario 1, we're going to use our nightly trending list, and this is something we email to all of our stock volatility box members every single night, and I think it gives us a good just first starting spot because there's no code required for this specific condition. So this trending list is a list of stocks and ETFs that we go through manually, and we email this to our members, right? And typically there's around 3 to 6 stocks on this list. And so that gives you just enough to where this exercise of going in every night, putting in these conditions, just because we already have the prices ahead of time. We know our entry, we know our target, we know our stops. That then lets you have a systematic way of playing that nightly trending list, and there's no code required. So let's go ahead and show you how to do that with Microsoft. So particularly with Microsoft, we're going to be looking to buy if price crosses above 179.18, which is above the current price, within the first 15 minutes after market open. So for me, that's 6:45 a.m. Pacific that I'm looking for Microsoft to cross above 179.18, in which I want that order to trigger, and if that doesn't happen, then close everything out. So let's go on to ThinkOrSwim and see how we can make this happen with both targets and stops in place. So coming to the ThinkOrSwim platform, we'll start in the Trade tab. Once you click Trade, assuming you're looking at stock for this condition, hover over the ask price where you should then see a label that says Buy. And so once you do that, you can right click here and click Buy Custom and click with OCO bracket. This then triggers both a target as well as a stop order. So now for us, we had said that the price we wanted was 179.18. Let's assume that our target, just for example's sake, is at 182. And let's assume that our stop, just for example's sake, again, is at $3 away, so 176. Right? And so let's just say that this is the trade basics. Now, how do we add in the time condition to make sure that this happens only in that first 15 minutes of the market open and not a second after that? So now to do so, come into the buy order, and you should see a gear emerge if you hover over the buy order towards the far right. Go ahead and click that, which then opens this entire automated trading pane, right? It's a triggers pane really. Order rules is what they call it, but this is where we can start to customize. So for this particular example, we'd like to cancel this order. So that's in the conditions tab here. And we'd like to cancel the order from Microsoft. And it's not price-based, so actually we don't need anything here, but instead it's just time-based. So let's assume that this was for Monday the 20th, which is the next available date. Then we'd come in and that time would be 06:45:00. Since I'm in local time, that would be 6:45, and that's 15 minutes after the market opens. So now if we check to see what our actual order here says, we see that there's a second condition in the description which says cancel the order automatically on April 20th, 2020 at 6:45 a.m. if it is still active. Right? And so that's essentially how we go ahead and do this. Our price is connected to the limit. We have an order to buy 100 shares. It's only good till the day. And we have an order to cancel. We click save. And once we click confirm and send, that should then send out all 3 of these orders. The buy order, which is based off of the time. And if that order gets triggered, then we have both our targets along with our stops set ahead of time. So really, you can go ahead and let the machine do the heavy lifting for you. Now, the one trick, if you are using this for the nightly trending list, is you want to make sure that the order is a GTC order and you cancel it just in case that order gets canceled based off of the time you're executing for the next day. And that's scenario 1. Let's now move forward to scenario 2. For scenario 2, we said we wanted to sell an iron condor on Home Depot whenever the price was between $195 and $200. And is the key word here because the or condition is much easier, but the and condition is not. And this was a suggestion by a non-subscriber actually, so shout out to him if he's watching, but this is a suggestion that he himself faced in the real life trading scenario. And so again, you can see why you may want these conditions and this code. So now here we're going to look at the code ahead of time, which we've said plot signal if our close price is above $195 and the close price is below $200. And if that's true, then result 1, else 0. And you don't really need that 1 or 0 if you took out the if, but we've put that in just so it's nice, clean, and consistent. So let's go ahead and copy paste this into the actual ThinkOrSwim platform and see what happens here. So now, coming back to the Trade tab in ThinkOrSwim, this time we'll go on to Home Depot, and something that you should notice here is that our price is currently above that 195 and 200 area, right? And if we take a look at the chart just to see why I'm suggesting that potential trade, 195 to 200 basically takes you in this zone. So whenever price comes into this zone, you're saying that, hey, I'd like to launch an iron condor, assuming that price is really going to chop sideways here. And so your iron condor might be for, say, between 210 and 190, just for an example's sake. So let's say you wanted to build that iron condor to be between that 210 and 190 area, right? So we'll come to the trade tab. Let's say you go out to the May series, right click the 210s, and we click sell iron condor here. And that automatically gives us the 210 and 215. So now we need to adjust the side to have it account for 190. And so let's just say we wanted to go down to 185 and then 190 here. And so that's a credit of right around 205 right now. And so we're going to launch this when price comes down a bit. And so that should hopefully mean we get slightly favorable prices. And so that should hopefully mean that we get slightly favorable prices, right? And so we'd like to join really at the mid. And so now if we go ahead and click that same gears icon to open the condition here, what we can now do is come into our conditions tab here, and we can copy paste that code. So we'll say Home Depot, come into study, edit. This time we'll click the ThinkScript editor at the top, and you can reduce this pane if you'd like just a little bit, if you'd like more room. And let's go ahead and copy paste that code in. So here we'll paste in the code, and this should compile without errors. And if you're following along with the PDF, this should make the job really easy. Otherwise, you can type it along. It's just plot signal, and we're checking to see what the close price is. But now what should also happen if you expand this is you'll notice that there's an alert value pane that pops up at the bottom. And this isn't so useful for this particular scenario, but this will start to become more useful as we layer in things like moving averages and so on and so forth, because it tells you exactly when this alert triggered to be true, right? So at this point, for example, those conditions were met. Price was between 195 and 200 at this given time. And so that's what that means in this alert scenario setting. But now here, if you click OK, that then means that the study is linked and we'll change the trigger to be true. And the other thing that we'd like to change here is we'd like to link our limit order price to the mid, right? We don't want it to just have this 205 price because we're hoping that it's better at that time. And so if we come down here, we should see that there's an ask and bid, which is our mid price. And you can also stagger it if you'd like by any offset amount. But now if we come down here, what you should notice is it says sell iron condor, and it's our condor for the 210, 190, essentially when the following condition is satisfied. Home Depot study plot signal is if close is greater than or equal to 195 and it's less than 200, then 1, else 0 is true. And otherwise, this will show a wait condition. And so if we click save here, and then you click confirm and send, that's all that's required. And you'll also notice that the price here has now changed to a credit of plus 0.00 instead of that price that was originally plotting, which was this 205, because at this point, our order is now going to be linked to the future mid price whenever a condition's true, not the current mid price. Now again, keep in mind that these are all just for demonstrative purposes, so they're not real trades, so please don't go placing them. But this should start to give you an idea of how, based on whatever you're looking at, you can start to bring in the same functionality. Plus, this then gives you the flexibility to place these order conditions as even say something like GTC, and you can then have the luxury of saying, hey, if it gets filled, fantastic, and even put in something like an expiration date, which if we come back into the settings menu here, you can say something like cancel at, and if this condition is not true by, let's say, the 24th, so this Friday, then go ahead and cancel this order. Right, so at this point, you've fully automated that idea that, hey, if Home Depot comes down, this is the trade idea that I'd like to pursue with the notion that Home Depot is just going to chop sideways from here. Let's now move on to scenario 3. In scenario 3, we're going to assume that we have existing shares already, and we'd like to sell a covered call whenever price hits our fib extension. So for the purposes of this scenario, we'll use Livongo Health as an example. The ticker there is LVGO. But we're going to assume that we already own 100 shares of this, which I think a lot of you may already own. And so this is a pretty valid idea that I tried to find that was setting up right now. So if we head on over to the charts, We'll start by first looking at the chart of LVGO here. And so looking at the chart here and drawing a fib from our swing high to our swing low, what we can notice is we've essentially hit that 1272, we paused, then we made a straight shoot up to 1618. So now assuming that you think that there's a little bit more left in the gas tank and we're going to make a move up to that 200 extension, that's that 2.00, or the price where we currently can see is going to be 44.88. And using our options chain here for Livongo, that can then tell us that, hey, using 44.88 as sort of that anchor point, that 45 call is the one that is closest in terms of what would be an at-the-money strike whenever price hits that 2.00 fib extension, or rather if it hits that. So now, instead of having to sit here and watch the position or do something like come to the charts and right-click and create the alert to notify you whenever price hits, you can go ahead and set this entire position in ahead of time, right? So we'll say, hey, I'd like to sell that 45 call against my 100 shares. And again, keep in mind, this is common sense, but the 100 shares have to be in the same account in which you're selling this call so that it's linked as a covered call. And so here, if we click the settings icon here to go ahead and dive deeper into this settings menu, we can tweak some of these to represent what we're looking for here, right? So the first one we'll do is come into the conditions tab. And if you just highlight over, it should automatically include the symbol you're looking at. So in this case, LVGO. And we're looking if the mark of LVGO is greater than or equal to, we said 44.88. And if this is true, then we'd like to sell our covered call, or we'd like to sell this call, and we'll once again link this to the ask divided by the bid, so that's the mid price, and that is then our rule that we're now looking for. And so if we scroll down here to read that English description of this, we can see that it says that, hey, submit the following order, which is sell one call, the 45 strike in the May series, if the following condition is true, which is the mark price of the security is greater or equal to 44.88. And if that's not true, then this order will show a wait condition status during waiting, right? And again, if you'd like to add in that same time-based condition to also cancel this at the end of the week, just in case you don't want this to be indefinite, then you can go ahead and do so. But if you did want this to be an order that's, continuously on, then we need to change the time in force here to also be good to cancel. And using that then gives us the conditions that we need to sell a covered call against our Livongo held 100 shares position whenever price hits that 2.00 or the 200% extension level, the fib extension, in which we start to think that, hey, price is really going to start to halt from here. And so the idea is, if we come back now to the charts, if price hits our 200 extension here, and then we get a little bit of a pause and another pullback here, then that covered call starts to give you just free income to start to make as the shares are starting to lose value. You're still making that income up in the form of options. Right, and another reason why you may be thinking that is also that squeeze histogram is starting to turn. Just more reasons why, if you are in Livongo, this is a real life trade scenario that you might be actually looking at if you do happen to own some shares. Now for scenario 4, we have this idea, which is to buy a pre-selected put whenever the RSI on the underlying is showing us breakout signals. And so here we'll just use the SPY as an example, and I'll also show you what I mean by the breakout signal on the RSI. So we'll start with the charts first and then go to the trade tab. On the charts of SPY here, if we go ahead and add in the basic built-in RSI study in ThinkOrSwim, so this is what we have to use in order to stay within the constraints or the limitations that we were talking about earlier in terms of the shortcomings of that triggered window. But if we use this RSI studies window here, and you open the studies pane and you turn that last setting, the show breakout signals, to yes, then you'll notice exactly what I'm talking about. It's these arrows right here, right? And if we start to use those arrows as a condition for why, say, you may be looking to buy a put, and this time, say, instead of the daily chart, you may be looking at something on a smaller time frame chart, like, say, the 30-minute, right? So let's start to introduce in the idea of a smaller time frame, and there you're looking to buy a put whenever you see this breakout signal. So that would have been somewhere here, trying to play this move to the market pulse line. In this case, you would have still entered at this point, and you would have had to wait it entire out to get this gap down lower, but you get the idea. It's these breakout signals that are built into ThinkOrSwim. So let's go ahead and come to the trade tab. So now let's say that you wanted to buy a SPY put. Now, unfortunately, you do have to pre-select a put ahead of time, but let's say that you chose based off of liquidity. So here the 285 seems to look pretty good, right, compared to the options chain. So we'll say, hey, I'd like to buy the 285 put. and it's currently going for 983, but let's go ahead and tweak those settings here to try and see if we can get an optimal price. Right, so the first thing we'll start is adding our actual study condition here. So in the conditions tab, over simple, we hover over, we get SPY. In the method, we click study, edit, ThinkScript editor, and here we paste in the code that we have, which is plot signal is equal to RSI, which is the method, and we close out the parentheses. And then specifically, we're trying to access the plot, which is the down signal, and more specifically on the previous bar in which it was true. Now, the reason why we're trying to reference the previous bar is so that we have a full condition in which the signal has finished printing, as opposed to one in which it's currently still printing and you accidentally get triggered into an order, whereas that order, say at the end of the day on a daily, did not actually finish printing in terms of that bearish arrow. And so that's where we're going to reference the previous bar. And so this way we know that, hey, that condition has actually checked out to be true. And we said we wanted to look at this on a 30-minute chart. So if we click 30-minute, based on if you want to leave the extended hours on or off, you can then click OK, change the trigger here to be true, and we'll also change what our limit is linked to, which is going to be, once again, that mid price, right? And this then lets us try and get the most optimal price possible. And if you'd like to add in a time in which this cancels, say the end of next week, then you can go ahead and change that to the 24th of April. And just like that, we have exactly what these conditions are. So let's go ahead and see if our layman's term English description of this actually makes sense. So we have, hey, go ahead and buy one SPY put in the May series, the 285 put, by whatever time, if the following condition is true, which is the study the plot signal equals RSI dot down signal is true on the 30-minute time frame on that previous bar. And if that condition is true before 424.20 at 19:18:56, which is just a generic time, but really the end of market on Friday, then go ahead and cancel this order. And you can tweak that to be whatever you'd like based off of your time frame, but this then gives you the idea of how we've created this entire condition based off of that built-in down signal in the RSI. Oh, and one more thing before I forget is if you probably want to change this time in force to good to cancel, especially if you're looking to have this order for later on in the day. And so just like that, we have scenario 4 completely built out, and we have, in order to buy a SPY put, whenever this condition is true, in which we have that RSI show us a down signal on that 30-minute time frame on the previous bar, right? And if that doesn't happen by Friday, then go ahead and cancel that order. That's what this is saying. That's what even the description says, and so that's how we've satisfied scenario 4. So now let's go on to scenario 5, in which we're going to be looking at pullbacks and trends. Now this time, we'll write some ThinkScript to enter into a stock that has stacked moving averages. Now those of you that have seen some of our previous tutorials, like the simple breakout tool, know that our favorite stacked moving averages are usually the 8, the 21, and the 34 exponential period moving averages. If all three are on top of one another, then we can assume that that's a bullish trend, and that's really the assumption that we're making as part of this code. And so with that bullish trend, so when the moving averages are stacked, we'd like to buy a pullback rather to the 34 exponential period moving average. And that's what we're really looking at. So we'll study the code here, and then we'll copy paste this into ThinkOrSwim. So what we first do is we define all three of our moving averages here. So this should be code that is now familiar. We've done this a million times. We then define a stacked condition, and that stacked condition is two separate conditions in which we're checking if the 8 is greater than the 21 and if the 21 is greater than the 34. And if the stack condition is true, then we're looking, hey, if we have a close less than the 34 EMA, less than or equal to, then go ahead and return true. And the reason why I don't have what is true in some of our indicator files, which is also another condition that says, hey, this was not true in the previous bar, is because this is only going to get triggered one time. And once that gets triggered and filled, this order is now essentially filled and canceled. So we don't need to worry about that condition in the next bar. It's not something that stays there. That's one of the reasons why I think ThinkOrSwim has sort of this limitation in the sense of what's possible with automated trading. So now that we've understood this code, let's go ahead and plot this in the same trade menu. So coming back to something like, say, SPY, this time we'll use the shares just to mix things up. And we'll come into our studies pane here, and we'll say SPY method. And this time we go to the study one more time, click Edit, ThinkScript Editor. And here, one more time, we'll go ahead and paste in all of our code. So we'll see that this compiles with no error, and our alert value even shows us when this condition would have been true on the daily chart, right? So using the daily chart, this is one time in which the condition was true, in which if you were buying a call, you would have actually felt some pain. If you were buying shares, you may have been okay. Here's another time in which that condition was true, in which we can see that, hey, having this condition ahead of time just always sort of there on the S&P was a good idea because you were able to pick some of these rare opportunities and pick stock up at relatively cheap prices compared to what you usually get, and you didn't have to sit there and monitor this, right? So this condition may be true or may be good, excuse me, for some of those relatively stable names that you're just always ready to buy, say, on a pullback on, or maybe part of, say, your weekly exercises in which you found stock that you'd like to play 30-minute trends on, or hour trends, whatever it is. Then you can go ahead and do the same setting, and on the 30-minute chart, you'll notice we have a few more examples in which you were able to participate, right? And so just like that, we've now built in our conditions. Again, that extended hours is something you can change based off of your preference. But now if we click OK here, we change our time in force to be good to cancel. And we also changed this triggers condition to be true because that's what our study sort of calls for. Then we now have the same condition, which let's go ahead and review what the description says here. Buy 100 SPY shares at a price of 286.66 or better. Is that what we want? No, we should probably link this to a better price, right? Instead of the manual. And so we'll come in here and let's say in the case of buying shares, we'd like to join the ask price here, right? To try and be as cheap as we potentially can be. So we join the ask price whenever our condition is true, and that's a good to cancel order. So now if we come back down here, we'll see that this is now changed. Buy 100 shares of SPY when the ask is at or below the market ask, and that's only if the following conditions are true, which is our condition code that we plotted in which we checked whether or not we had a stacked moving average. And if that condition is true, then this condition will trigger and actually happen. And if it's not, we'll be seeing a wait condition. And that's what we'd like to see. So let's go ahead and make sure we have this all correct. And just like that, we can click Save. And now we have an order to buy 100 shares of SPY anytime that we see a pullback, or anytime we get a pullback while we have stacked moving averages to the 34 EMA. Now let's move on to scenario 6, in which we're going to take this one step further and reference another study in ThinkOrSwim, this time a slightly more complex study, which is the TTM squeeze, and we'll assume that you already have a position and now you're looking to sell that position whenever the squeeze is starting to lose momentum. So the code for this is also fairly simple here, right? And again, if you've seen any of the previous squeeze tutorials, this should again be fairly familiar. We have plot signal is equal to if we have the TTM squeeze.histogram on the first bar, which is the previous bar, is less than even the histogram on the bar 2 bars below it. Right, so if we have an idea just to paint what that means, that's saying, hey, if this is the current bar, let's just say, and this was sort of how the histogram looks, then that condition would be true if this is the current bar. That condition would have been true here and would have been filled in the open of the current candle, whatever that time period is that you're looking at, whether it's daily, 30-minute, whatever that may be, right? But that's why we're checking to see whether or not our histogram bar in that previous candle was less than the candle before it, so that we know that, hey, it's starting to decline and we'd like to get out because our squeeze histogram is really telling us that the momentum now is shifting a little bit, or at least away from our bullish position. So now let's go ahead and copy paste the same code into the trade tab to see what this looks like. So again, coming back to the trade tab, now assume that you have 100 shares already, right? So this time we'll say have this as a sell order on an existing position, where you can do so just by looking at your monitor tab and right clicking and doing sell, whichever way you'd like to do so, right? And so let's actually start afresh. So let's just do sell here. And so now we're looking to sell 100 shares, assuming we already own 100 shares. So we'll come to that same settings menu. This time click study, edit. One more time, go to the ThinkScript editor. We paste in this code. This time we see it's much simpler, right? It's just a one-liner code. Using that daily time frame, we can see all the times that momentum has started to shift. So you may want to start to narrow this down with other conditions, using moving averages, the Hull moving average, whatever it is. But you may want to layer on certain conditions, because this alert value very easily tells you that, hey, if this is your condition, then chances are you're likely to get a close order fairly soon. Right? Maybe that's what you want. And so this is where the alerts pane also lets you understand just how sensitive some of these conditions that you've programmed in are. So now if we click OK here, you can once again change those same settings that we're typically now changing, which is what you change your limit to be linked to, and then what your time in order is. And that's how the squeeze histogram order is now very quickly completed. And then the one thing that we forgot to do that we need to do is change our triggers here to be true. And so now if we come down to see what the description looks like, we can see that it's essentially saying, hey, sell our 100 shares, good to cancel. Whenever the following condition is true, which is our histogram is starting to decrease, then we want this order to be true. And if that's not true, then hey, continue to ride out this position until that signal does come to see if we can get higher highs. Now in scenario 7, we're going to start to make this a little bit more complex and start to layer on multiple indicators. So for the 7th scenario, we're going to take a look at combining multiple conditions into one trigger. The concept that I think we're really trying to get across here is less about some of these actual conditions, but it's more about the idea that, hey, we can now start to layer on some of these more basic indicators to start to have different permutations, different combinations, and you can now start to bypass some of the complexity errors that you may face with some of your favorite indicators by going to the core, seeing how that indicator is built, because more times than not, it's usually comprised of some of these simple indicators, which you can then start to build and reference on your own independently in this study's pane. So now the specific condition that we're going to take a look at is we're going to check to see whether or not we have a squeeze with greater than average volume. And if our EMAs are agreeing with that direction, so we're stacked, then we want to go ahead and buy a pre-selected call. So here's the code that we have for it. That first part of the code should look fairly familiar, which is our stacked moving average code. And so once again, we have our stacked code. This time we've just renamed the variable to be bullish. Now we also have our squeeze code, and this time instead of referencing the squeeze histogram, we're referencing squeeze alert, which is the condition that triggers that red or green dot. And when we see if that trigger condition is equal to 0, that's when we're checking if we have a red dot squeeze with the built-in functionality, built-in factors, all that good stuff. And then finally, we have our volume condition in which we're checking to see whether or not we have greater than average volume by referencing the volume average study. Particularly, we're going to use the two plots, the volume plot, and we're checking if that is greater than the actual volume average line. And if that's true, and we also have our close, which is greater than the previous close, then we want that plot to be true. And so now we take all three of those conditions, right? So these three conditions right here, we combine them into one variable that we're going to call conditions, and we plot the signal to be true one more time if it's true on that previous bar, because that then means that, hey, all these conditions met on that previous bar at that previous bar's close. We can now go ahead and enter this position at this current bar's open. So this time we'll switch it up. Let's go to a chart of, say, Apple, and we said we wanted to buy a call here. So let's go ahead and click something like buy, and we'll come into the studies pane one more time, click symbol, method, and this should all be very familiar at this point, right? We're just going to copy paste in the code because we understand it. Not spend too much time actually trying to write the code from scratch. And here we can see that the condition has been true just a couple times using the daily chart on Apple. And so either you could have sat there, you could have waited to try and find these exact conditions whenever they hit your scan, and then try and play that game of, hey, do I want to get in? Do I not want to get in? Oh, what is this indicator saying? Or just programmatically put in these conditions ahead of time, start to see that, hey, for the most part, whenever we've gotten these conditions, Apple has continued up higher from there. So you do have faith and confidence in this overall setup. Whenever this is true the next time on the daily time frame, we want to go ahead and execute on this order, right? So we click OK here, and this time we'll make sure we click our triggers condition to be true. The time in force, one more time, GTC. We don't know when this condition is going to be true, right? So we're going to put these in ahead of time, and they may get triggered a ways away from now whenever this volatility starts to calm down and Apple once again starts to make its move back up. But at that point, you're rewarded for that effort that you had to take one time to do. And if you create a sheet with all of your triggers code, then every time this triggers essentially gets either valid, and so sort of this order actually takes place and gets triggered to be true, then you have this code ready to go for the next time you'd like to relaunch the same order. So one more time, we'll change our limit to be the mid price so we can try and get that most optimal price whenever these conditions are true. And just like that, we have these conditions, which I believe this is all we're looking at. So let's double check in the description. Buy one Apple call. The 290 call is the one that we selected. Again, it has to be a pre-selected call. And we want to do so only when we have the following conditions true, which is we have a bullish overall moving average, we have the squeeze to be true, and then we also have more conditions which it did not currently plot here, so let's make sure that it did in the actual studies pane. Right? And we can see that it did in fact all plot to be true. And so we know that it's just not showing here. And so you can see that a little bit of the text gets truncated here, but that's how you can double check and confirm. And you can also see it at the top here as well. And so now if you click save, that's then your condition in which you're automatically buying this Apple call. You've done the research once and you're taking advantage of this series whenever this condition happens to be true in the future at any given time, and regardless of when that is. All right, so I hope you all are still following along. We're now on to our final scenario. So we're almost there. This is split into two different parts. So this is going to be a little fascinating, mostly because we're going to take the concept of implied volatility and start to apply things like Pullbackto trends to it, where we can start to use implied volatility as a variable that we're plugging in. So there's a little interesting concept there. Let's go to the code of that on the slide and cover on what we're going to do in part 8a, and then we'll cover what we're going to do in part 8b and go ahead and code both of them at the same time. So for our last and final scenario, we said we had two parts, right? And in the first part, just to do a quick recap, we said we're going to look at coding just the entry components. And here the idea is we'd like to now have moving averages run on implied volatility itself. So using implied volatility as our data input as opposed to the close of the price of the underlying. And so this is a little bit of a shift, and what you can see is on our code plotted as an entire IV condition right here. Right, so I think the code is going to do a better job of explaining this than I am, so I'll just use the code to explain it. Our first condition is what we've already covered, which is stacked moving averages on price action. So there, we should understand that already. That makes sense. The second one is now we have implied volatility defined using the built-in implied volatility function. So this is built into ThinkOrSwim. And using that, we've then defined three separate, again, EMAs. But this time, instead of using the close as that input, we've put in the implied volatility, and we're doing so on an 8 period, a 21 period, and a 34 period. So now let's take a step back to first understand what is the premise, why did I even make this a condition, and what am I trying to see with this, right? So the idea here is I'd like to buy a call option when implied volatility is going up, and I'd like to do so on a pullback of the implied volatility component of that option in a stock that is already on an otherwise uptrend. So there I'm trying to optimize for both buying in a bullish stock on an IV uptrend, looking to try and pay as little for that option as possible and get sort of that best value that I potentially can. Right, so there we have then our final conditions here, which is if we have our actual moving averages stacked on the real stock, as well as our IV moving averages stacked, as well as our implied volatility being less than that 34 period exponential moving average, then plot this to be true. And if you'd like to layer this on into one more condition, which makes this even more narrow, you can reintroduce in the idea of the close being less than EMA 34 as well, and make that an AND condition that you add to the end of this here, you append it. And so then there, you've narrowed down your focus all the more. And we'll also cover the exit code here, but simultaneously, as we place this buy order, we'd also like to place a GTC exit order here. And this time, we'd like the GTC order to be whenever our moving averages are no longer stacked, but this time on a lower time frame chart. So for the purposes of this, for the entry, we'll use something like, say, the daily to get in. And for the purposes of the exit, we'll use something like the 4-hour chart, which is sort of that next lowest time frame as our cue to get out. Right? And in fact, actually, let's probably tweak this to be a 1 hour. And so this way we're able to get out a little bit ahead of time, probably get some fake outs here. But I think from the alert signal perspective, it should be a little bit more interesting for this coding exercise. Now looking at the code here, this should be fairly obvious, right? We just have our moving averages because all we're looking is whenever the stack condition was true 2 bars ago, but is not true in the previous bar, essentially telling us that this current bar is the bar in which we have the okay to go ahead and participate. And so this is essentially saying that, hey, we went from a period of having stacked moving averages to now no longer having stacked moving averages, and we'd like to now get into this condition if that condition was true. Now something here should stand out compared to the entry, which is our conditions references previous bars here, right? Here our actual conditions criteria is the one that's actually doing the referencing, while our signal variable is in the present tense, versus if we take a look at the entry variable, we can see here that our conditions variable is in the present tense and our signal is in the past tense. So it's not meant to confuse you, it's just to give you an idea of two different ways that you can go about doing it, coming to the same end conclusion. So now let's go ahead and copy paste both of these code scenarios into the order, but we'll show you how to build this order in a way that you have a bracket sort of order in which with the buy order, the sell order is also getting triggered, but both of them have custom conditions based off of these studies. So here, let's finally mix this up. We'll go to something completely random like, let's say, Procter & Gamble here. Here, whenever you find the option that you're looking at, so in the case, we'll just find the at the money, we'll right-click, click Buy Custom with Stop, and that then gives us two separate orders here. So now let's start tweaking some of these things. So we'll start first with the entry order. So the entry order is the buy order for the call. So we'll click that settings icon there, and this then opens up the code where we can now once again come into the symbol, the method, the study, and copy paste in the code that we already have ahead of time. So here we'll come into the ThinkScript editor, paste this code, and we should see that this compiles, and we can also see whenever this condition has been true on Procter & Gamble using the daily chart, right? So that condition was true here, where you had a pretty nice upward move in Procter & Gamble, then that condition stopped being true, then again you have that condition be true right here. So you can see that despite having this implied volatility sort of variable in here, that condition has been true for the most part, and you may have a scan or whatever to try and find these on a broader scale, but you can see that for the most part, that did give you a really nice win in PG and some nice opportunities to get in, which otherwise you have to sit there and monitor and watch and try and patiently wait for. Right? And you may set this for as many stocks that you're looking at, but that then gives you an idea of how you can take leverage of this condition from whenever this happens to be true. So that then takes care of our entry condition, right? So now if we click OK here, we can again change this trigger to be true and limit this to the ask/bid, make this a good to cancel time in force, and here we click save. Now let's go ahead and tweak the same thing, but this time for the sell order. And so currently you should see that it's plotted as a stop and standard. So let's first come into the settings icon, click PG one more time, edit, ThinkScript editor, and this time we're going to paste in the exit code. So once we paste it in, we said we wanted this to be on a slightly smaller time frame chart. So let's come in and we'll change this to a 1 hour chart, just for example's sake. And so now using those trigger conditions, you can see that, hey, there's a couple times in which this was true off of the 1 hour time frame chart. And then the idea is to then see, hey, was this actually effective or not off of the 1 hour time frame chart in terms of when I should take my exit. And of course, you may tweak this based off of, your own study sets, so on and so forth. But this should then give you an idea of how you can go ahead and tweak both the buy order as well as a trigger order to try and sell that order automatically that gets triggered with your buy order. And so if we change that trigger now to be true, and then we come up here, we've changed our stop that's linked to now be to the ask/bid. And instead of being a stop, let's say we want to just make this a limit order, and it's tied to the last ask/bid. And we then click save. What you should then notice down here is that the stop order has now instead changed, and we have two limit orders that are getting triggered here simultaneously. Now you'll notice here we see we have an error, which is an order triggered by a GTC order, must also have a GTC order that's linked to it. So if we change this now to GTC, that then gives us the condition, and if we were to click confirm and send, that would then go ahead and trigger both the buy order to try and enter on that pullback to the implied volatility, and then a sell order whenever the stacked moving averages is not true on the 1 hour chart if and only if we've actually gotten filled into the buy order. And so hopefully that then gives you an idea of all the possibilities that we have to try and take this exact idea and really programmatically, systematically plan out all of your trades ahead of time and really sit there once, build in your conditions if that's something that you really like, especially in paper money, and start to use that to try and backtest different conditions, and whether that's on a smaller time frame chart, day trading, swing trading, whatever it may be, but you then have really a machine that's working for you, and your job is purely doing the research and having the machine go ahead and actually execute those trades. Now again, there's all those limitations that we've talked about earlier in terms of complex studies. You'll get errors when you try to reference some of our favorite studies, which are things like the market pulse, right? Because we're starting to use complex functions like compound value, which are not supported in this automated triggers pane. So that's it. That's the end of all 8 of our scenarios. And now you may be asking, well, okay, what else can I do here? And I think if you enjoyed this tutorial or you enjoyed this idea of automated trading, or I should say, semi-automated trading based off of what this actually is, then you can use this to really go ahead and test the length of your own setups, right? How far can you push, think, or swim before you start to face some of these complex errors? And if you do face complex errors, well, can you start to break apart your indicator, find the real conditions that you care about, and start to see if those are passing the test of some of this automated triggers pain values that we're currently seeing. The second thing that you may also do is start to use paper money as a sandbox environment in which you're just looking to try and continuously test all of your setups and use this as a real-time backtesting scenario in which it triggers you into a condition based off of whatever you may have researched, and then it also gets you out of these conditions based off of whatever your plan may be. And finally, I think really the biggest joy here is going to be in trying to push the capabilities of this platform. You can start to do things like test different order types. You already saw how we took a custom order in which we said buy custom with what is meant to be a stop order, but we instead linked that to then a moving average stacked sort of concept in which we changed that from a stop to a limit order that's still now linked to our original buy order, and we've now achieved the condition that we're looking to achieve. And it takes you out at a price that's optimal, whether that's a win or a loss, but you get to stick to your plan and you get to actually execute on that plan. Alright, so this was a long tutorial, but I hope the level of detail was useful and that the step-by-step approach and going through sort of this hands-on application with all 8 of these scenarios was useful in trying to understand the depths of automated trading inside of ThinkOrSwim. If you'd like to download this PDF along with the code snippets, all of that is available for free on our website at tosindicators.com/indicator/automated trading, where there's a pretty good blog post with this as well that takes you step by step with slightly different examples as well in some scenarios. Thank you all for watching and making it through the end of this tutorial. If you enjoyed this video, I'd appreciate a thumbs up and a subscribe, which really goes a long way for us as YouTube creators. Alright, thank you all and we'll see you in the next tutorial.